What's good, everybody? Spektrades back here. In this video, I'll be going over our high probable setup series, where I will be going over the A through Z formula on how to find high probable setups. And this is a three-part series. First, we'll be going over section 1, higher time frame direction, and then we're going to be going over when to look for buy and sell day trades and where to look for them also, and also a risk management aspect. And after that, we'll be going over high probability setup examples, where I go over in depth on these examples right here and show you exactly how to find high probability trades. So first, let's start with section 1. So a key principle is to always align your day trades with the direction of the higher time frames. So me personally, I mainly use the daily or the 4 hour. So make sure you guys are taking notes on all of this also. For bullish direction, when higher time frame is bullish, use the previous day low to high range for retracement entries. Focus on the New York session lows to high for retracement opportunities. Look for sell stop raids at the previous day low to accumulate longs. Target the move from higher time frame discount to premium arrays. So as you can see here, we are in a bullish leg right here. Price was playing around inside of this higher time frame range. So first, we see that price was creating higher highs and higher lows. So this indicates to us that we are in a uptrend, as we can see. And then, just like we stated, we grab our higher time frame discount to premium arrays. So we align it from this old low to now this old high right here, and we are looking for zones inside of this higher time frame discount zone. So this is our discount zones down here, and this is our premium zone up here. So if we want to look for bullish trades, we have to wait for price to pull down into our discount zone before we go on the higher time frames. And it's the same type of thing here for the bearish direction. When the higher time frame is bearish, we use the previous day high to low range for retracement opportunity entries. We focus on the New York sessions high to low for retracement opportunities, because that's mainly the session I trade, is the New York session. But on the trading plan in examples below, I give you a full London session trading plan also. And then we look for buy stop raids at previous day highs to accumulate short. And then we target the move from higher time frame premium to discount arrays. So as you can see here, price was in a downtrend, right? Price was creating lower highs and lower lows, lower highs and lower lows. So as you can see, with this old high right here and now this old low, just like we stated, we have to wait for price to pull back into a premium array before we pull down. So as you can see, price left this 50% of this fair value gap aligned with this broken old low right here. So this is a clean zone right here for us to take a high probability setup. We have the higher time frame in line because we know that the higher time frame is in a downtrend. And now on the lower time frames, when we look for trades, we'll be moving with the higher time frame direction, because if you want to take a counter trend trade, price is just gonna spack you down and then your stop loss will get taken. So the first key thing is to align yourself with the higher time frames, because the higher time frames is your friend. It will guide you on the lower time frames. And here to continue is when to look for buy/sell day trades. And here is some key areas for London session. The London session equals the manipulation/the reversal times, right? So the kill zone time for London session is from 2 a.m. to 7 a.m. Eastern Standard Time. The London open plus the London close session, all of them together. So right here, some key areas to look for: Asian highs or Asian lows to get swept, or any form of external range liquidity to be taken. And then is to stay patient and wait for a pullback to distribute, and then to continue that trend. So this is right here our trading plan for the London session. Make sure that London session traders take notes of this also. The New York session mainly composed of continuations and expansions. The morning kill zone session for the New York session is from 8 a.m. to 1 p.m. Eastern Standard Time. In the afternoon session is from 2 p.m. to 4 p.m. Eastern Standard Time. And then another key area is to look for Asian highs or lows to get swept, or any form of external range liquidity, just like we stated right here. And then we stay patient and wait for a pullback to distribute to continue the trend. And then for the Asian session, we have to wait for consolidation/liquidity to be built. So during the Asian session is a horrible time to trade, because it's a low volatility and there's choppy markets, and it's from 4 p.m. to 12 a.m. Eastern Standard Time. So right here is your key times in the trading plan also on when to look for these day trades, because they occur at a certain time. So align yourself with these certain times and take notes of these and go on your charts and see them for yourself. And now is to understand where to look for buy/sell day trades. Timing is truly key. I would say prefer buy day trades during seasonal bullish periods and prefer sell day trades during seasonal bearish periods. So just like we stated, once you understand the higher time frames, if we are in a seasonal bullish period, it will be more key to look for buy trades. And if you are in a seasonal bearish period, it will be more key to look for sell trades. And for market quarters, always favor bullish quarters when you are looking for buy trades and favor sell quarters when you are looking for sell trades. Always align yourself with the higher time frames and wait for a key zone to be tapped into before you scale in. Entry, and then for our entry, after a positive reaction at a discount PDO rate on the daily chart, scale down to the lower time frames and see if you can see a high probability setup form, right? First, we look for our zones on the higher time frames, the daily, the 4 hour, and the 1 hour. And then we scale down on the lower time frames to see these high probability setup. And then for a path is ensure a clear path to an opposing premium array. So as you can see here, since this old high failed to push price lower, this now will be our new draw on liquidity. Price was simply pulling down to mitigate this fair value gap in this breaker to push price back higher. So this is our opposing PDO array where we can look for price to pull towards to after price mitigate our point of interest. And then right here is the best days to buy. The best days to buy are Monday, Tuesdays, and Thursdays, because Mondays and Wednesdays, I would say, create the low or the high of the week. And on Thursdays usually show the biggest ranges, I would say, throughout the week is Thursdays. Now for the risk management aspect, for the stop loss strategy for buy/sell day trade, let the trade breathe. Don't rush to move the stop loss. Never be in a rush to move your stop loss to break even. Let the trade breathe. Let price show you exactly how it's gonna move. Always set your stop loss below or old entry low or an old entry high, just so it can be safe. Risk between 0.50% to 1.5% of your total trading capital per trade. Move your stop loss to entry after 50% of profit target. So when price is moving toward your take profit, then you can move your stop to the entry at break even so that you can avoid a loss trade because you're already in profit. And also you can start trailing your take profits also and just start trailing your stop loss. And then also is to stick to your trading plan and avoid moving the stop further away. So always stick to your trading plan. If you set a 30 pip stop loss, don't try to bring it down to a 50 pip stop loss now just because you want the trade to work. Leave it at that 30 pip stop loss, and if it takes you out, just move on. And next is to account for slippage in volatile markets for the forex traders out there. And then next is regularly review and adjust your strategy. This right here is not infinite. I would say you can just change this over time. You can raise your risk. You can change this over time based on your trading plan and how you're trading. Always regularly review and adjust your strategy. And for profit taking guidelines is to set a predefined profit target, such as 2 to 3 times your risk amount. So if you are risking 0.50%, set your take profit 2 to 3 times more than 0.50%. That you have a predefined profit target and that you are not getting greedy when you see that profit. And then right here in some key take profit zones are previous day highs, previous day lows, old highs, old lows, and etc. So these are right here are great take profit zones that you can look for. And always use a trailing take profit. Always trail your take profits and locking in profits as the trade progresses. Never just let the trade go and not locking in profits, because the money's right in front of you, right? And that's when you get greedy. You want a certain profit amount. Always close and take profits when you see it give it. And right here is to take profit when your risk to reward ratio is met, such as a 1-to-3 ratio. So also I have a predefined profit target. So for me, it's usually a 1-to-2 or a 1-to-3 risk to reward ratio. So once I achieve this right here, I close my trade and I will just step away. All of this is part of the trading plan. And last but not least is to stick to your profit taking strategy and avoid getting greedy, right? A lot of people, they get greedy fast and they lose a lot of profits. So always avoid getting greedy. So right here was the trade management aspect. I hope you take notes on all of this right here. Now let's look at these high probability setups examples and how. So for our first setup is gold. We have gold right here on the 5 minutes time frames. As you can see, we have our Asian range liquidity getting built right here in this gray box. I speak about this indicator a lot. It just shows me the Asian range. And then just like I stated, one of the criteria that we look for when we were trading, we were looking for the Asian highs or the Asian lows to get swept. And now in this example, price came and swept the Asian lows and then pushed higher and gave us a market structure shift of this swing high right here. And price came back down and gave us a inducement low. And right below that inducement low, we have a 5-minute order block. And just like I stated for the New York session traders, we always align our charts from 8 a.m. to around 1 p.m. Eastern Standard Time. So right here, as you can see, price opened up and then pushed down lower and tap inside of our high probability setup, our 5-minute order block with inducement low. That took liquidity in a breaker structure, and we have our take profit all set up right here. Our stop loss is right at this old low right here, just so we can be safe. And what time was our entry? At around 9:45 a.m. And what did price do? Price came in, push down lower, sweep our inducement low, tap inside of our 5-minute order block right here, did not dig inside of our stop loss, but reversed quickly to come and take our old high, our take profit zone right here. Perfect for this New York session trade. So this right here is what you call a high probability setup. It started with the Asian lows getting swept. We had a market structure shift. We have our inducement low, and we have a clear order block that have yet mitigated with liquidity above it. Price will just come back down, sweep that inducement low, tap inside of our order block, and then to go higher. So this is our first high probability setup. And now for the next example, we have the pair GBP/USD on the 5-minute time frame. Just like I stated, it's not truly a prerequisite, but when you're trading the London session, you always kind of want to see the Asian highs or the Asian lows to get swept. So as you can see right here, price came and pushed higher and gave us a liquidity sweep of the Asian highs. And I forgot to mention it right here, but this was a market structure shift of this old low right here, and aligned with it was a fair value gap. And as you can see, price was just pushing down, and price reversed right between 2 a.m. to 7 a.m. This is our London session kill zone time right here. So price pulled back higher, tap inside of this 5-minute breaker block. This 5-minute breaker block was the one that pushed price higher before we got this liquidity sweep. So this was our high probability setup. Price took liquidity from Asian highs and gave us a market structure shift of this old low right here, all in line with our London session time from 2 a.m. to 7 a.m. Price will then come back up, and where we place our stop loss, just like I stated, always place your stop loss right at old highs right here, just so you can be safe. Price came back up, use this breaker right here, and where is our take profit zone? Our take profit zones is always old highs or old lows. So right here is our first take profit, is this old low right here, and this old low will be our second take profit. And all of it is happening between 2 a.m. to 7 a.m. This is for the London session traders right here. So this is the second example of our high probability setups happening during London session. Right here, we are looking at the Euro USD pair on the 3-minute time frames. So this is our next high probability setup. So right here, as you can see, price took liquidity of these old lows and gave us a market structure shift of this old high right here. But we are waiting for price to come inside of our kill zone time before we execute trades. That's part of finding high probability setups. High probability setups happen during high probable times. So if you are out of a session and you are looking for a trade, like you are trading Asian session, the setups won't play out as cleanly and perfectly as it would if you were trading a key session. So as you can see, price took liquidity and a market structure shift and left us this inducement low, all between 8 a.m. and 1 p.m. during the New York kill zone time. And then as you can see right here, from this order block, this clean order block, aligned with the 50% of this order block, price came back down to clear our inducement low, all during the New York session, tap inside of our 50% of the order block. Price came in and tap inside the open right here, but it failed to push price higher. So this right here was a inducement low. Price has to come back down and clear this, because this low failed to give us a higher high of these old high right here, but it was just used to induce early buyers. So price will then come back down and clear them out, tap inside of our 50% order block. Just like I stated, our stop loss, always place your stop loss at old lows right here. Stop loss always goes at old lows, and your take profit zones is old highs. But this right here is another example of high probability setup. First, we start on the higher time frames and develop a higher time frame bias to understand where the higher time frame is going. Then we'll scale down to the lower time frames and wait for price to come inside of our kill zone times, the 8 a.m. to 1 p.m. for our New York session, and from 2 a.m. to 7 a.m. for the London session. And then we'll look for amazing trades like these. Perfect. If you guys want to see more videos of me, make sure you guys subscribe and like and comment down below what you think and more video ideas. Part 2 for these series is coming out shortly. Make sure you guys stay tuned. Make sure you have your bell notifications turned on. This is it. Spektrades out. The foundation of high probability trades.